For the last 3 decades, the world has looked at China with a mix of admiration and envy. We watched skyscrapers sprout from the ground in weeks, endless bridges, and high-speed trade networks that put Western infrastructure to shame. They sold us the story of the Chinese economic miracle. But what no one told us, and what the Chinese Communist Party tried desperately to hide, is that a massive part of that growth wasn't real. It was an illusion, built on a mountain of unsustainable debt, and literally on concrete that nobody needed. To understand the scale of the disaster looming, we must first understand a key figure: 30%. The real estate sector grew to represent 30% of China's GDP. For reference, in Spain, just before their bubble burst in 2008, construction was around 20%, and we know how that ended. China took this to the extreme. Housing became the sole engine of the economy, and dangerously, the only piggy bank for its citizens. In the West, people invest in stocks or bonds. In China, due to strict capital controls and a stock market that looks like a rigged casino, 70% of family wealth is buried in bricks. The cultural premise was simple and, apparently, infallible. Housing prices in China can only go up. Parents bought apartments for their sons because, without a house, it's impossible to get married in modern Chinese society. People bought a second, third, even fourth apartment, not to rent them out, but simply to leave them empty, waiting for value appreciation. An unprecedented speculative fever was created. Local governments, unable to levy certain taxes, relied almost exclusively on selling land to developers to fund themselves. It was a perfect, vicious cycle. The government sold expensive land. Developers took out massive loans to buy it, built fast and cheap. And people went into debt for life to buy apartments off-plan, years before the first brick was even laid. The entire system relied on the blind trust that the music would never stop. But the music has stopped, and the silence is terrifying. If you travel through certain interior regions of China today, you will encounter landscapes straight out of a post-apocalyptic movie. These aren't ruins of war, they're ruins of greed. The famous ghost cities. Imagine driving for miles and seeing forests of 30-story residential towers, completely finished, with shining windows and painted facades, but where absolutely no one lives. There are 6-lane avenues with no cars, gigantic shopping malls full of dust, and sports stadiums that have never heard applause. It is estimated that there are enough empty homes in China to house the entire population of France, Germany, Italy, the UK, and Canada combined. We are talking about over 65 million empty apartments. How is it possible to build so much without real buyers living there? This is where the business model of giants like Evergrande or Country Garden comes in, which functioned, for all intents and purposes, as a legalized Ponzi scheme. The trick was pre-sales. Developers collected 100% of the price from the client before even starting to build. But instead of using that money to erect that building, they took the cash to buy more land and pay off debts from previous projects. It was a constant race forward. They needed to sell tomorrow's projects to pay for yesterday's holds. As long as credit flowed and people kept buying, the scheme held up. Evergrande became the most indebted real estate company in the world, with liabilities of over $300 billion. To put that in perspective, that debt is higher than the GDP of entire countries like Finland or Chile. Their executives lived like emperors, buying soccer teams and electric car companies, while the foundations of their empire rotted. Before we see how this house of cards collapsed, if you're finding this analysis valuable, hit that subscribe button. It helps us uncover more stories like this. But the most tragic part isn't the empty buildings. It's the millions of families who paid their life savings for homes that will never be built. They were trapped in the middle, paying mortgages for holes in the ground, watching their dreams and financial security evaporate to fund the party of a few. And when reality hit, it hit with the force of a tsunami. The year 2020 marked the point of no return. Xi Jinping and the top leadership of the Chinese Communist Party realized they were holding a ticking time bomb. They knew that if the bubble kept inflating, the final explosion could end the regime itself. So, they decided to pop it themselves in a controlled manner, or so they thought. They introduced a policy known as the 3 red lines. Basically, these were strict rules prohibiting developers from taking on more debt if they didn't meet certain financial health ratios. It was like turning off the tap instantly for an addict who had been consuming cheap credit for decades. Overnight, the business model of Evergrande and others became unviable. They could no longer borrow to pay old debts. Liquidity dried up. And then the first default arrived. Evergrande couldn't pay interest on its international bonds. Panic seized the markets. The company's bonds, previously considered safe, became worth pennies. Construction sites halted across the country. Motionless cranes and workers going home unpaid became the usual sight. What followed was social unrest rarely seen in such a controlled dictatorship. We saw unusual images: home buyers protesting in front of Evergrande headquarters, threatening suicide if they didn't get their money back. Suppliers, from architects to cement manufacturers, went bankrupt because developers paid them with worthless IOUs instead of real money. The crisis of confidence was total. No one wanted to buy a home off-plan for fear it would never be finished, and without sales, developers had no money to finish the ones they had started. The market froze. Housing prices, which could never go down, started to fall. And when the price of people's main asset falls, a devastating psychological effect occurs: the negative wealth effect. The Chinese suddenly felt much poorer, and they closed their wallets. Consumption plummeted, dragging the entire economy down with it. The problem is that real estate in China isn't just an island. It's the foundation of the entire financial system. When developers fall, the domino effect is immediate. First, the banks. Chinese banks are exposed to trillions of dollars in bad loans. But even more dangerous is the shadow banking system. Unregulated lenders who gave money to developers when no one else would. That money is gone. Then there are the local governments. Remember they relied on selling land to survive? Well, in 2022, land sales plummeted by 50%. Suddenly, cities across China have no money to pay their civil servants, maintain roads, or subsidize public transport. We've seen bus lines stopped and pay cuts for teachers. This is a systemic collapse. And don't think this stays in China. The impact is global. China is the world's largest consumer of commodities. If China stops building, the price of steel, copper, and cement crashes worldwide, affecting economies from Australia to Brazil. Furthermore, a China that doesn't consume is a China that doesn't buy products from the rest of the world. German factories, American tech companies, luxury brands, everyone is feeling the chill. The factory of the world is stalling. But perhaps the most terrifying aspect isn't the economics, but the demographics. Because this crisis is happening at the worst possible moment. just as China begins to die of old age. China is facing a perfect storm. The economy isn't just slowing down, it's hitting a structural wall. We are seeing phenomena that look dangerously like the lost decades of Japan, but with a crucial difference. Japan got rich before it got old. China is getting old before it gets rich. The youth unemployment rate has reached such alarming levels that the government simply stopped publishing the data. This has given rise to the lying flat or Tang Ping movement. Young people, disillusioned, are refusing to work hard, get married, or have children. They simply lie down and do the bare minimum to survive. It is a silent rebellion against a system that promised them prosperity and gave them debt. Xi Jinping's response has been more control, not more freedom. Crackdowns on the private sector and erratic policies have scared away foreign investors. Billions of dollars are fleeing the country. The era of double-digit growth is over forever. We are looking at years, perhaps decades, of stagnation. The dragon is tired. The question isn't whether China will collapse tomorrow, but how this slow decline will reshape the global order. The world relied on China to drive growth. Now, China is becoming a drag on the global economy. The party is over, the bill has arrived, and it's too expensive for anyone to pay. We are witnessing history unfold. If you want to understand the economy of the future and protect your own, make sure you're subscribed. See you in the next one.